Hot Stocks Analysis, SOFI Stock, NIO Stock, Tesla Stock Best Investment Opportunities of 2023. Hey there, fellow investors! Welcome back to our YouTube channel where we dive into the world of finance and uncover the hottest investment opportunities. Today, we will analyze not one, not two, but three exciting stocks that are making waves in 2023. Hold on to your seats as we discuss SOFI Stock, NIO Stock, and Tesla Stock, three names that have been dominating headlines lately. Whether you're a seasoned investor looking for that next big score or a rookie eager to join the game, we've got something tailor-made for everyone. Let's get started. Wait for SOFI stock to fall 40% before you buy. First, let's dive into this intriguing article about SOFI stock. So, there's been a lot of chatter lately about federal student loan repayments and how they might impact SOFI Technologies. But the article tells us not to get too carried away with this news. Apparently, some analyst group thinks that SOFI stock is not being valued correctly and even downgraded it. In the past, the author recommended waiting for the SOFI share price to hit $6 before jumping in. And guess what? That chance might come soon because the company is about to drop its second quarter 2023 earnings result on July 31. But here's the deal. There's no crystal ball to tell us whether the stock will skyrocket or tumble after the earnings report. So, the risk-reward balance might not be compelling enough for a long-term investment. The author's advice: pick your buy price and be patient. Now, let's talk about the juicy bit, the student loan news that has everyone buzzing. Apparently, the first required federal student loan repayments are on the horizon, and that's expected to start in October. And to make things more interesting, the interest on those loans might start accruing as early as September 1. But wait, there's more. The Supreme Court rejected President Biden's attempt to forgive millions of student loans. Naturally, investors seem to think that SOFI will cash in big time from student loan refinancing. But hold your horses. It turns out that not all students would have qualified for federal loan forgiveness anyway. Even the CEO of SOFI Technologies, Anthony Noto, acknowledged this. Okay, so here's where the plot thickens. Wall Street doesn't seem to be going all gaga over SOFI stock. The analysts are predicting that the company will keep its track record of negative earnings in the second quarter of 2023. Out of 17 analysts, only 7 of them are giving it a buy or equivalent rating. Seems like the love for SOFI isn't unanimous. Truist Securities is one of the bulls though. They're still waving the buy flag and calling SOFI a structural winner as the banking industry fragments. On the flip side, Morgan Stanley analysts are raining on the parade as they downgraded SOFI from equal weight to underweight. Morgan Stanley seems to think that SOFI stock might be overpriced, assuming a 2.1 times estimated 2024 tangible book value per share. But they reckon that SOFI's bank business might only hit a 15% ROTCE by 2026, justifying a 1 times price to book value. In plain English, they think the stock might be too expensive for what it's actually worth. So what's the verdict? Well, the federal student loan news might not be the magic one for SOFI's revenue, and the analysts have varying expectations for the company. Considering all of that, you might want to wait for the upcoming earnings report before making any moves. If the stock takes a nosedive and hits the sweet spot of $6, then it could be a good time to jump in with confidence. Don't read too much into the latest NIO stock news. So, NIO is one of those electric vehicle or EV stocks that can make some serious moves based on news and speculation. On July 24, the stock shot up by almost 11%. And you would think they released some amazing financial results or delivered a bunch of vehicles, right? Well, not exactly. The real driving force behind the surge was a piece of news from China's National Development and Reform Commission. Apparently, they plan to support private investments in various sectors of the Chinese economy, and this got investors all excited about NIO's battery swap station network. You see, NIO is trying to stand out from the EV crowd by offering customers the option to swap out their car batteries instead of waiting to recharge. It's a clever solution to the limited range issue, one of the major headaches with EVs. Plus, swappable batteries allow NIO to offer their vehicles at a more budget-friendly price. No wonder investors were hyped up about this development. But here's the catch. Are they overreacting to the headlines? Well, some experts seem to think so. There's a skeptic in the house and they're not fully convinced that NIO is the next Tesla. They have doubts about NIO's chances of becoming a major player in the EV market, both in China and globally. Sure, the stock has been on the rise lately with hopes of a revenue growth comeback in the near future. However, our skeptic friends believes that competition is getting fiercer and NIO might have to cut prices aggressively to boost demand. That could lead to higher than expected losses. Not great news for investors. Now, some positive factors are in play, like the potential appeal of NIO's swappable battery feature down the road. It could boost demand without eating into their profit margins. But here's the kicker. These good things might not happen in time to prevent some disappointing results in the coming quarters. So what's the bottom line? Well, our skeptic friend suggests selling into strength or avoiding NIO altogether. They reckon that even though there are some hopeful signs for the company, the stock might have already factored in most of the good news. If things don't play out as optimistically as investors hope, there could be some downside risks. Of course, investing is always a bit of a gamble, and NIO might surprise us all. Is Tesla stock a buy or a sell with California's Attorney General investigating the EV giant? Lastly, we've got some hot-off-the-press info on Tesla or TSLA stock, and you won't believe the twists and turns it's taking. So after Tesla's second quarter financials were released on July 19, the stock seemed to be taking a breather. Investors seemed more concerned about falling gross margins than the impressive earnings and revenue numbers the global EV giant had just pulled off. But that's not all. There's some serious legal drama going on too. California's Attorney General is diving deep into Tesla's affairs. They're investigating autopilot safety and false advertising complaints, and they're seeking info from customers and former employees. Now back to those financials. Tesla reported some pretty solid numbers, with Q2 profits growing by a whopping 20% to 91 cents per share, and revenue soaring 47% to $24.93 billion. Analysts were expecting profits to increase by only 4% to 80 cents per share, with revenue at $24.22 billion, up 43% from last year. But despite the impressive growth, there's a little hiccup in the gross margins department. Total gross margins came in at 18.2%, down from 19.3% in Q1, and a decline of 682 basis points compared to last year, not quite hitting that 20% floor they were aiming for. Analysts had already been sounding the alarm on the gross margins, warning that it could be a bumpy ride ahead. But Tesla CEO Elon Musk remains optimistic, claiming that autonomy will make all of these numbers look silly. However, after the earnings, the stock took a tumble, dropping by 9.7% on July 20. But hey, it's still holding on to some gains from July, so not all hope is lost. Some notable figures are also selling off their Tesla stock holdings. Cathie Wood, the famous investor, offloaded over 73,000 shares before the financial report, and even after the earnings, she sold another 20,700 shares for around $5.49 million. It's no secret that Tesla and its CEO Elon Musk are always in the spotlight. They're like peas in a pod, and anything Musk does or says can have an impact on Tesla stock. Some worry that his Twitter antics might be weighing the stock down, but recently, he hired a new CEO for X Corp and it seemed to ease some concerns. Now, the big question is Tesla stock a buy? Well, it's been a wild ride over the years, and Musk's electric vehicle revolution has shaken up the auto industry like crazy. Tesla stock had a monster run from 2019 to 2021, but it hit a low point in January. With all the price slashing and the global push for EVs, there's no doubt Tesla has been through some ups and downs. But Musk is banking on their Cybertruck and autonomous vehicle technology to take them to new heights, not to mention a possible boost from the Inflation Reduction Act. Still, it's worth noting that Tesla stock is currently extended from a cup base, so the timing might not be ideal for a new buy. But hey, keep an eye out. There might be more opportunities down the road. Thank you for joining us in this video, and be sure to hit that like button and subscribe to our channel for more valuable insights into the world of technology and finance. Until next time.